Welcome to the market recap presented by Tackle Trading. Get in the game.
Good afternoon, Tackle Traders, and hello YouTube. This is Frank coming to you with the market recap for Wednesday. It is the 7th, another interesting day in the market, gapping down on the open, selling in the futures market, gapping down on the cash open, and really fighting back throughout most of the trading day. So buyers may be trying to step back in. We'll have to see. A little too early for me to feel great about saying that, but we're seeing some signs, at least on shorter term time frames. And welcome out, Stephen. Great to see you, sir, as always. Hey there, Scott. Hope everybody is doing well. Certainly an interesting day in the market. You had gold and silver break out and run. Well, silver broke out. Gold just kept running, right? So you had crude break that little support zone and really sold off, bouncing off of that $50 zone of support. That should be an interesting battle to watch over the next few trading days. As you can kind of see here, looking at the heat map, it was pretty mixed. Most of our weakness seemed to be concentrated a little bit more in the financials, at least collectively. Of course, Disney down on an earnings miss. Certainly not a ton of strength in the healthcare side of things. Hey, Marquise, good to see you. On the healthcare side of things, a little bit of weakness. On the other side, we really saw some nice upward movement off of the lows on some of the stocks in the materials sector. On the earnings front, it's still here, right? Some names of note. We've got about a dozen S&P companies tonight, about a half dozen tomorrow before the open. Tonight, AIG, Monster, Booking, a couple of the big names. You also have Lyft reporting after hours as well as Fossil. And then tomorrow before the opening bell, another relatively light round of names, Kraft Heinz, Cardinal Health. So still here, but kind of working through it as we're at the tail end of earnings season now. Taking a look at the S&P, it was an interesting day. I mean, right out of the gates, we gapped down on the open and it was like, here we go for the Bears. And hi, Patricia. And hey, Micah, great to see you. Jimbo, always a pleasure, my good man. Hope you are doing well. It seemed like it was, it got going quick, gap on the open, selling immediately, but interestingly, holding our support and really fighting back throughout the rest of the day. I think it's a little easier to see if we zoom into maybe an hourly time frame here, but this is turning out to be a little bit of a W pattern on these shorter term time frames. Now we know we've got some work to do from a bullish perspective, but looking like it might be a little bit of a W pattern. Going to need a little upward movement, I think, for confirmation. For me, I'm not going to be too aggressive in these market conditions, as that'll surprise nobody here, right? So, but it is starting to look like we've got a little bit of a floor built up. We've tested that same support level twice now this week. So certainly something that the bulls can hang their hats on. We really don't have a lot of resistance until we get into that 29 to 29.15 range, at which point we do have some price action. Depending on how long that takes, that should have that 9 EMA dragging down as well if we're able to get up into there. So we need to see a little upward movement, in my opinion, but we did see fight. I do think we have to respect the fight that, at least for today, the bulls were willing to put up. It wasn't going to, I can only speak for myself. It wouldn't have been easy for me to buy off of that low, a half hour into today's trading. That's for sure. I'd still like to see this first wave of buying, see how the sellers respond when we get to resistance, when we see some sell signals on the intraday, whatever it might be. That's always going to be my preference personally. But I certainly understand there are some, quote unquote deals out there, right? Stocks that were, at a much higher price just a couple of weeks ago. Do think we need to watch that 29 to 29.15 zone, the 9 EMA and the 50-day moving average as kind of that resistance area is kind of what should really cause some, that's what would scare me if I were buying into it. I guess I'll put it that way. And welcome out, Adib. Great to see you. And Thiago, always a pleasure, my friend. I hope you are doing well. Very similar across the board here today in our other indexes. The NASDAQ, a little bit of a stronger candle, kind of gobbling up all of yesterday's. Hey, Ilka, great to see you, my friend. Gobbling up all of yesterday's price action on an intraday level. Probably looks a little bit stronger. We've already broken that. And we talked a little bit about this yesterday. It just took all day to break that resistance, right? Unlike, maybe the S&P that's got a little bit, there's really nothing on the NASDAQ, in my opinion at least, until we get into that 7640 range, which isn't, tremendously far away here. I'll be the first to grant that, but a little bit of room. That's also where that hourly 50 is going to be lining up. It looks like should be an interesting battle there. And welcome out, Raphael. Great to see you, my friend. Hope all is well. Hope the market treated you nice here today. Very similar over in the Dow. A little bit more of a drag. Disney having rough earnings, certainly not going to help it out any, right? But very similar in the sense, I'm just going to still that we were able to hold support, did work up into resistance, have a little bit of room on the intraday if we can break to the upside. With all of that said, Pascal, great to see you, buddy. With all that said, I do think we need to remember that the market is kind of in the trade war environment, and maybe it's over, but my opinion is until we're sure, I'm not going to guess. So at least we're sure this round, right? But certainly some signs the bulls are willing to come in. On the other side of it, some upward movement could result in some really interesting bearish retracement. So if we do see some buyers coming in on the shorter term, could be some interesting bearish retracements for us late week, probably early next week. And we have a pretty good idea of where the bulls think the bottom is. Looking at the Dow is a pretty easy one. It looks like they're believing in that 200-day moving average, testing these lows twice now this week. Those lows give out, I think, a pretty good, clear signal to the bear side. There's some room because of how volatile it's been between here and there. In a weird way, we're just in a really volatile sideways range, right? Right. If you kind of look at this price action here, we've got some room on both sides. Certainly going to be interesting. I'm going to continue to be leaning towards more defensive sectors from a bullish point of view, lean towards breakouts, things that are showing a ton of strength, have held up well, not really digging around for the sweet tech deals, but that's just me, that's just me going forward. And certainly still a lot of bearish plays involved. So I still think we're kind of in a stock pickers market overall. Here. And lastly, over on our old friend, the rut, very boring day, very good day for most of us as far as the rut is concerned. We do have that support level. And if that does, give out, probably need to think about what we may want to do from a hedging perspective on our condors. But the rut has a tendency to find its way back into the middle. At least it has all year long, right? So I'm not going to stress it until I have reasons to. Certainly, if the market keeps selling, I would expect that that's a legitimately possible if the market remains under pressure. But if we're able to kind of stabilize a little bit, I expect that we're just going to continue to hang around here. And 2 weeks from now, we're hanging at 1540. Rut's still sideways. So those are my expectations. If we give out on our support level, I do think we need to reevaluate, at least short term. I would call that a fairly bearish signal. We don't have a lot of support until 14 in my opinion. So that's going to get a little bit closer than I would like from a condor perspective. So that is where we find ourselves on the broad market. We're fighting back. I don't think there's strong signals, but we are starting to see some things on the intraday develop as potential support zones, potentially breaking resistance, and in the NASDAQ actually breaking through resistance here. So some positive signs. Probably the biggest winners here today, at least from a sector perspective, was the materials sector. I mean, it was just on all day long. And unlike the market that kind of took a half hour or so to get going, gapped on the open and really just sweet, let's get into it, and really bought back into it. We've liked this a lot. It's just late, we broke some support, right? You have to call it what it is. Working into this resistance zone, I do think this is something worth keeping an eye on from a support and resistance perspective on this XLB ETF here, around 57 and a quarter. Upward movement, I could get it, because if we do kind of zoom this back into a more weekly perspective, I mean, if you kind of look at this from a weekly perspective, and if this is just a chart, we don't know anything else about anything, we've got a hammer candlestick at the trend line, maybe a little bit of slowing momentum, but certainly a bullish trend as we're moving forward. So I do think some upward movement could be interesting if the market's settling down. And I have my doubts. I want to see sellers. I want to see them have an opportunity before I get too crazy, because I don't forget when things get volatile. Usually they stay that way for a little while, and I'll just go with the odds. I certainly don't know. I wish I did, but I'll go with the odds. But I do think you have to like the response, big spike of volume, hammering, at least as of Wednesday here on the weekly time frame. Keep an eye on that resistance. A breakthrough that could be interesting. If we look at some of the big names within this space, old Sherwin-Williams, probably the most attractive of them all. Lately breaking out on that great earnings report. Tough to do anything today after this beautiful, beautiful candle if you weren't there, but showing some strength. On the other side, you've got a lot of weakness here on Lynn. I'm going to steal this line here. I'm a big fan of Lynn, but got to call it what it is. We're below the short-term averages, below the 50, hanging on a little bit of support and old resistance level. That's a tough chart for me to want to buy. And you can only really think about yourself, right? And so I wouldn't want to buy that chart. I know not everybody agrees with me, of course, but showing a little more weakness than I would like to see. Echo Labs holding the 50-day moving average. That's a nice thing. APD, I think you have an interesting development here from a breaking of support perspective, but also from a holding of support perspective, a little sideways, but still at least holding up, bouncing back above that 50. PPG, on the other hand, who was just not that long ago on the bullish breakout watch list, bouncing off the 200, but not a great looking chart. So as we kind of look at some of the names in here, and you guys may feel a little differently, and certainly that's all right. Hey, Amy, good to see you, my friend. They've got work to do for the most part, in my opinion. You had a little bit of a bounce back on Dow after breaking its low. These are not looking like particularly strong charts, but when you look at the ETF as a whole, definitely some nice movement today. If we can get kind of back into that, above that 57 and a quarter, I would expect testing 58 is probably realistic, unless a tweet happens, right, during that time period. And that is, of course, the market that I feel, at least, that we're currently in. So we do have to respect that side of it. On the other side, energy gapping down on the open. We did come off of the lows, but we still are closing below that resistance zone. We looked at these a lot lately, but we looked at them yesterday. A lot of weakness. Things that are hanging by a thread at support have broken support. Oxy certainly was a pretty ugly one here today. See if I can say that, after breaking its support level. SLB, I know we've got them on the reports. We looked at them yesterday as well, breaking through that support level. So we did hold up here today, coming off of the lows in the sector, but I don't really feel like you can trust that movement. Maybe a bearish retracement, I think that would be okay. That's what I will be looking for. Either build a little floor and then break down some more, and that rhymes. I didn't mean it to, but maybe I'll patent it. Or get a little bit of a bearish retracement going into a little bit, probably early next week. We need a few days of upward movement. I still maintain that it's bearish or nothing, in my opinion, at least as of right now, over in energy. Over in financials, we did come off of the lows. Banks continue to struggle and be an area of concern, in my opinion. Of course, we gap down here. BRK or Berkshire kind of testing a long-term support level. That's kind of an interesting place. Never really traded them. JP Morgan, kind of big old doji at that 200. Bank of America testing kind of a support zone, but a little bit of room to go to the downside. USB, who was hammering yesterday, never upward movement here today. All of a sudden, yeah, that concerns me. So these banks are definitely showing some concerns. AIZ came out with a pretty decent earnings beat, breaking through resistance and hitting an all-time high. Maybe need some development here. There is still strength in certain areas. We looked at CME yesterday as well. It's still knocking on the door of a break. You could even argue that we did break today and just need some confirmation, or maybe you've already had confirmation. So it's not everything. Really feels like it's more banks. We're holding up okay, but not as nice as we were last quarter. Over in the insurance, as many of you guys know, that was one of the nicest places, at least from my perspective, to be from a bull on the bull side last quarter. Just very calm, mellow upward trends, showing a little more weakness, although we did hold support here on Travelers. I think this is an interesting support battle for it. Upward move, pull back, then a higher high, we'll talk. Break below, I think we can talk. Right now, I think we need a little development on a lot of the things in there. The banks do concern me, and I do think we need to be a little bit careful when it comes to the financial sector overall right now. We can, arguably at least use yesterday's high as a little bit of a swing. I mean, it's maybe a bit of a stretch, but we did see lower highs and lower lows off of that, right? And so we at least know there's a little bit of resistance. I think any real talk about long in the financials, at least broadly speaking, happens above yesterday's high for me. And then we've got all of the fun stuff, right? Most notably in the case of the financial ETF, in my mind, going to be that 50-day moving average, going to have those battles ahead of us. Pretty flat day, but a nice candle here over in the industrials as well, kind of holding a support zone. I feel a little bit better about betting on this support from a technical point of view than some of the other sectors that are testing support. That's a long, pretty good history at this support level. My biggest issue with the industrial sector overall right now is it's cats and Boeings and things like that. They are very sensitive to the trade war stuff. So I do think we want to continue to be careful there. We looked at NOC yesterday. Hopefully we looked at it again here today. Broke out early in the trading day, really running. So as much weakness as there has been in the market, and there certainly has been a lot as of late, there's still some strength. It was about 2-to-1 or 1-to-2, I guess I should say. 52-week high gainers. There's around 15 S&P companies that hit new 52-week highs. Many of them were REITs and utilities, but they about 15 on the high end and about 30, just over 30 on the bottom end, hitting new 52-week low. So we're still seeing some strength. I'm enjoying still the NOC, a nice bounce off of that support level. Some of the defense companies maybe can be a little bit of appealing if we see some upward movement to me. At least. Over in tech, holding support here as well. Good candle, much like the NASDAQ. Really comes down to how aggressive are we. We're starting to see some development on the intraday, whether it's on the technology ETF or the broad market. We probably need a little upward movement. We know we're below a lot of stuff, right? Moving averages, resistance points. More aggressive traders probably are going to like some upward movement as an entry point. And I certainly can understand that. More conservative traders, we're just going to kind of let it go and wish the best for everybody, at least on the bull side, broadly speaking, and see that next swing. So, there's nothing wrong, with stepping back a little bit. There's nothing wrong with lowering our position size. There's no rule that says I couldn't take a small position betting on support holding, right? I probably won't do that, but there's no rule that says I couldn't do that by any stretch of the imagination. Tech, we've got the semiconductors. We have to be a little bit careful, although I do think, just speaking of tech here, I had applied materials here, no, it was not applied materials. It was AKAM, economy. There we go. Actually had a really solid report. You can kind of see big pop on their earnings, pulling back into that 20, really solid movement here today. Not a semiconductor, but a very interesting looking chart. We've also got CERN, if we want to kind of flip it the other way. Whoops, that was not supposed to happen. Again, hanging by a thread at support. I would argue a break of that support is a fairly bearish signal. We have lower highs and lower lows. So we're seeing a little bit of all of that when it comes to the technology side of things over in the semiconductors, trying to hold their support level. You could argue that this is an interesting place, and I would listen to that argument. What's a major breakout point? You could say, hey, this holds, we have upward movement, it gives out, we get stopped out. There are lots of interesting semiconductors out there. But again, we've broken trend, we're below those short-term averages, we have some work to do. Cisco, an interesting one, nothing we can do, I guess, well, nothing I can do with Cisco, testing its 200-day moving average and this major support level with earnings next week, unfortunately, might be the type of thing I'd want to take a little bet on without those earnings, but I don't think for me, that's just too close to earnings. But, we've got a lot of support here. We are sitting at the 200-day moving average, nice little pullback. Why couldn't that say 27, right? Or even better, 67. Unfortunately, you can't get everything. So we want to continue to be a little bit cautious in these more aggressive sectors, in my opinion, at least. But I get it. We are starting to at least try to build a little bit of support. We're starting to see a little bit of upward movement, some, actually interesting things happening on the intraday. but we've got this type of stuff where we've got to deal with this, right? I always want to see this move, the pullback, and then, or the consolidation, and then to move up. You guys know how I like to do it. So, I'll never be rewarded on these deep pullbacks because I'm always very, very shy about them. Always fun to take a look at Apple, very similarly kind of doing that little dance here at that 50-day moving average. So there are some deep or interesting pullbacks in tech still, if that is your cup of tea. I prefer right now the more conservative sectors for bullish plays, at least as a whole. Speaking of those sectors, we had a really nice bounce back day here over in the staples, kind of doing that little dance at that trend line. These last couple of trading days, we're going to have to deal with the noise, right? We've got the 50, we've got the falling 9, then we've got the falling 20, we've got this old breakout point. So there is a little bit of noise that we're going to have to deal with in the shorter term on the ETF, but I do think it kind of shows that this is an area that may be a little more appealing to the bulls, because of its more defensive nature than maybe say technology. I certainly get it. I really do. Coca-Cola had a pretty nice move off of its 50. It's been doing that 50-day moving average dance all week long. Finally got going here today. Finally took out those those moving averages. Pretty nice upward movement. An area that I think we could like. I caught this one early, not a normal stock on my watch list, but Restaurant Brands, I saw them early in the trading. They kind of just sitting there on that 9 EMA. They had a really positive earnings report just a few days back, a little bit of a pullback to the old breakout point. I tried to take the picture as fast as possible to put it up over on Twitter. It certainly has moved a lot from there. Well, could call it a breakout, I guess. So an area that I think we can continue to like for the most part over in staples. And absolutely, Raphael, we can take a quick look at Facebook here. And we'll just use this as an opportunity. We'll skip, we'll mix things up here, get a little crazy. We'll look at XLC first. We're basically trying to hold this support level right now off of this week's low, Raphael. So for me, this is a no-go, really, from either perspective. I don't think this is in a good spot from a buy or a sell. I could be interested in a sell if we were to work up into this falling 9, into that 50-day moving average. But we're, lower highs, lower lows, kind of flipped over on the moving averages. Not my cup of tea. If I'm looking from a buying perspective, I feel there's better bullish candidates out there. Whether I'm right or not, we'll see. But I would feel that way. On the bearish side of things, depend. If we can go sideways in this range and then break to the downside, I think that could be a really interesting trading opportunity. If we were to retrace into, say, 190, 188, somewhere in there, and get some doji or a little bit of intraday development, I think it might be an interesting bearish retracement candidate. Right now, for me at least, this kind of goes here on a watch list. It's not really a great trade, at least from a swing perspective in my eyes, going probably into the rest of the week realistically. But if we continue to drift up and can kind of make a nice upward trend, develop, and then start to see something, maybe there will be there. So, the best thing you can always do, in my opinion, is kind of figure out what you want. I don't really have a strong opinion of Facebook one way or the other. And, ask what you want. What would you like? I think I'd like to see it kind of dance for a little while or retrace. And anything other than that, just probably wouldn't be all that interested in. Maybe I'm completely off. Maybe I should be buying Facebook right now, right? Getting those orders in. But it's always helpful if you kind of know what you'd like to see. Then it's just a matter of, is it doing it today? Nope, not today. Okay, see you tomorrow, Facebook. At least that's the approach I like to take. And I don't know right now on SYMC. Didn't they have some buyout stuff going on not too long ago? I thought, Stephen, there was some sort of buyout that was going on. Looks like we're not going to get any news right now, but they had some buyout, and that was that big pop that we saw here, and then it kind of fell through, if I remember correctly, and that was that big gap down in through here. So my best guess, while it doesn't look like at least I have any new stories, my best guess it's probably back into that. Right now, it's kind of one of those things, but I don't know the answer to that. Doesn't look like any headlines are out just yet But once somebody starts doing that stuff, whenever somebody starts getting that kind of, the merger acquisition stuff, I put them on the blacklist. I don't try to mess around with them on either side because weird stuff can happen, at least in my opinion, and that's not the weird kind of stuff that I like. Yeah, so that deal falling through, maybe it was something on that side of things. Speaking of Facebook, we do have the XLC kind of working into that 50-day moving average, that resistance zone. I think we need to take that out before we can get real serious from a bullish point of view. From bearish point of view, you guys know me. Take this on a case-by-case basis is always the way I look at the communication services sector. You could make an interesting case for Google right now. I really think you could. It's a deep pullback, but we're at that trend line. We've danced here for now 3 days. Got a little bit of an intraday top that's developed here as well. So you can kind of see a little bit of the, W type of pattern on this hourly chart. I'm just going to steal you because there we go. That's an interesting, risk to reward, probably sensible, just eyeballing it. That's an interesting pullback. If I'm looking at a pullback, I don't know. I don't hate it, I guess. So there you go, Stephen. Nice to hear that. So it's certainly interesting side of things. Disney, of course, missing on earnings. Not a whole lot happened after, we kind of got settled in for the day. A big doji. This is going to be a tough one, at least short-term price action-wise. I think a lot of people still do like Disney. I think we do have a little bit of support that we could look towards here, but going to need some development. For me, not a great response. Pretty big miss on earnings. We've taken out. One thing I like about Disney is I look at it from a chart perspective, right? There's only a few EAs out there that really, get me going one way or another. Right now, Disney had been in such a nice trend, upward movement, and we've thrown a little bit of a wrench in that. Never what I want to see. I want the chart to be as clearly one-sided as humanly possible, if I can. On the other, of course, the other big name here in Netflix, breaking down here today, was really selling early in the trading day. Gapped down and really took off, much like the market, ultimately catching up, and a pretty bullish development on that daily candle here. Now we're still below resistance. With this break, I wouldn't mind seeing a bearish retracement on Netflix. Certainly Disney coming in as a competitor, putting out the price, I think $12.99 for the Disney Plus, Hulu or Hulu Plus, and the ESPN Plus package. So a lot of people think that's going to put some pressure on Netflix. Certainly not looking great. Of course, that was a big miss on earnings. So, as we look at this sector, surprise, surprise, I usually don't like this sector as a whole. A lot of times there are individual things that I find interesting in the sector, but these charts just give me a boring chart. Give me, insurance and defense from last year. Give me utility stocks and staple stocks or nice smooth upward trends. These messy middles, I'm not a huge fan of. But again, that is just me, and I know that not everyone agrees with that. We did see some nice movement in utilities here today, still in the middle of the range, but still have some room to run before we get to resistance. So there's still some upward movement for us if we're looking at it from that point of view. Certainly a more defensive area. Knee hitting a high, breaking through some resistance. I think Southern has earnings here tonight, if I'm not mistaken, or maybe they were last night. So certainly some interesting breaks going on out there in utilities. When I was going through the 52-week highs and lows, there were a handful, probably at least 5 utility companies that were able to actually hit new highs here today. So overall, I think we continue to like this area. I think our best signal is going to be the break of the resistance, but we do have room between where we currently are and that resistance level. I think it's safe to say we're sideways between 59 and 61 right now. So I understand the bullish side of it. I do think we need to respect 61, as everybody here knows, though. Big bounce back off of the lows here on healthcare, an area I think we have to be a little bit careful with, though, going forward. Much like the market coming off of the lows, got a little bit of a top that's formed here, but we've seen a little bit of a double top breakdown. Got to be a little bit concerned about that. Resistance for me is going to be up there around 92 at that old support level, 50-day moving average. Before that, I would expect that 9 EMA. Could be interested in individual companies, but not the sector as a whole from a bullish point of view. For example, you have things like Abbott here just kind of sitting on its 50-day moving average after an earnings beat just last month. Yeah, I could understand that from a trading perspective. On the other side of it, and they bounced up pretty nicely along with the sector here today. But you've got a pretty clear floor that's kind of built up here on Johnson and Johnson. We got a pretty interesting level of resistance too, developing into whichever comes first is the signal, right? Break up, break down. We will see ABMD too, another interesting one. I thought after gapping down a huge, like 25%, some huge number, little bit of a support tried to form, breaking down here today, still pretty high volume relative to what is normal, quite a bit of weakness over there. So overall in the healthcare, case by case. And I think for the most part in the market, with maybe the exception of, the very defensive things like utilities and REITs, I would stay on the bullish side, not really look bearish. On energy, I'm staying on the bearish side, not looking bullish. Overall, in other areas, I think it's really kind of case by case. Our charts have been blown up with the price action that we saw on Monday, right? We're going to need some new development to get some clear signals. There's going to be upward movement, going to be downward movement. I think we can trade either way. And I think we want to be open to both sides. I don't think now is the type of market that we want to plant a flag and say, it's going down and everything's got to be bearish, or it's going up, everything has got to be bullish. I really like a blend of trades in this type of market personally. Upward movement, very nicely done here over on XLY. I think we want to get above 118 before we have any serious conversation. That was, of course, a major breakout point. Again, we win that fight. We've got to deal with the falling 9. We've got to deal with the 50, and then ultimately the falling 20. So again, case by case. But speaking of cases, I think you can make an interesting case for Starbucks here. I kind of threw some lines on here on the intraday to kind of walk through it a little bit. But as you can kind of see here, we've kind of putting in together that pattern. We've got that downward trend line on the intraday, right? That's kind of the pullback that we've experienced. We've now put in a higher low. We've yet to put in a higher high, right? So we haven't confirmed the break of the trend, but of course, this is really what happens in a pullback, right? A short-term downtrend or uptrend going, a short-term trend going the opposite of the longer-term trend. That's all really a pullback is, right? At least to me, it is. So very interesting, got a little bit of upward movement I think it needs. And again, I don't want to forget the type of market that I'm in because Starbucks is not immune to trade war stuff, right? They're maybe a little more insulated than Caterpillar or AMD or something like that. But, you guys know the drill. When things are selling, it can go quickly. But I thought a very interesting pullback developing over on Starbucks. Going on things like Target. I was watching for a breakout. I think it's safe to remove that now. Thank you for never breaking resistance target because that would have been a fake out. Lots of work to do, right? Of course, the big name in this space, Amazon, sitting on the 200-day moving average. I don't love that, but I do like it for the sector. These guys have a real impact on the sector. Home Depot just a couple weeks away from earnings, doing the little dance on that 50-day moving average. More nice movement over in McDonald's, though, here today. Very nice to see knocking on the door of resistance all of a sudden, right? How quickly that can happen. So overall, again, it's very much like the broad market. I think probably the discretionary sector is how you feel about that probably is in line with how you feel about the broad market as of right now. And lastly, this will be lastly over in real estate, pierced through that old high or that trend line on the little symmetrical triangle that we've been kind of following here. Didn't break above it, but we were seeing some nice movement. We looked at PSA yesterday, and they weren't the only one. They were just my favorite one. PSA knocking on the door of that resistance post earnings yesterday, pushing through that here today. Really nice movement. We were seeing some pretty good movement over in the REITs here today. Would have liked to see it close above that triangle, but maybe that's just me being picky is all. You had some nice movement, breakout on well here. HCP, I don't think they're on this list, but HCP, another really strong move, really strong break. So we're certainly seeing what it feels like money coming into these more defensive type of areas. Charts are starting to look nice, hitting some new 52-week highs and some of the REITs and some of the utilities. folks buying back into Cokes and things like that. So looks like, at least to me, that that's kind of where, and I get it, because that's kind of where my head is, at least. Those are the type of places I prefer right now. But there's opportunities out there, guys, and I think we just be fair. I don't think we want to have, like I said, I don't think we want to have a it's got to drop, it's got to not drop opinion in this type of market, or ever. But this type of market, I think that can lead us into some troubles. Let each chart, like I said, let each chart speak for itself. If the market's volatility is unappealing from a swing trading perspective, take a 5, right? Watch it. There's plenty of things to do. Go practice a new strategy in your a new option strategy in your virtual account, or take a smaller position size. No one's going to retire off of whatever happens tomorrow, right? No, and that's really never how it works. But if we're feeling like we're missing out, or we're trading into things that we're not comfortable with, not liking, those things can really cause us problems, if nothing else, mentally, right? So don't ever be afraid to take 5. Get what you want, whatever that might be, and never feel like you have to, defend why you want what you want. Be picky, right? Be picky. As we move into our metals, looking at gold here, had a really nice pop here on gold. I'll get into the actual gold and not the ETF here. Where are you? I'm on the wrong list today. Now I have 2 lists because I liked the way the one was, but now I use them both and it completely messes with me. We just really took off on gold, right? We've been running as of late. Everybody knows the drill. If you hang around tackle trading, we like gold. So that's probably the worst kept secret in the land. Really great move. Working into that 15-20 range. There is a little bit of history there. We've looked at it a lot before. Probably need to see that get taken out before that next swing. But you can kind of see here on the hourly chart, actually developing into a little bit of a bullish retracement over in gold. Remains very, very strong. It's bullish or nothing in gold. I don't think anybody probably needs me to sell them on that right now. Even if they don't believe in gold, they probably don't think the day is today. First time since 2013 or something that it closed, that it broke above 15. I think I read on the news. So certainly some great stuff going on over there. Same with silver. While we were sleeping, silver was breaking out of that resistance level, broke out very strong, big spike of volume, pulling back. You can see this was a really nice intraday, hourly chart. Breakout, pull back, test that breakout point. Great upward movement, pulling back off of the highs. If we're looking for new opportunities, we're probably looking for pullbacks right now in gold and silver. I mean, that was a heck of a run. Bigger picture, though, just like gold, well, we do have a little bit of resistance at 15, 20, 25 range, I think, on gold that we need to respect. And we do have a little bit of, resistance. We have a little bit of ways to go before we hit, that 1740 to 50 range, kind of that major or next real level of resistance. Maybe a little bit of a consolidation or pullback could be handy before new trades are made. But another great day for the metals, no doubt about that. Natty gas, another fairly rough day. And a lot of people, it feels like a lot of people at least, are kind of looking to see if maybe we can build some support in this $2 range for some boomerang style trades. And I do get that. I just don't think it's there yet. I think we've got some serious work to do. We need to reclaim something, right? Right now, we've reclaimed nothing. So still remains very bearish, doing that little dance at that $2 range. I get it. That makes sense. There is some history there. $2 seems like a good place as any to buy some natural gas, right? I guess no bullish signals yet right now. Still very bearish. And over on crude here today, I want to go to the hourly on this one too. Breaking down, and we've looked a lot at that support level around 54, just below $54. Broke down all the way, filling up that space towards that $50 mark. We saw a really strong rally the last part, second half of the trading day. I mean, it was basically tank to that, approximately 50 zone of support. Now we've seen a really strong rally here on the hourly chart. Let's see what happens when if we work back into that 53.50, 53.75 range. Maybe a little bit of a pullback. I think when we look at this on a longer term time frame, though, here on the weekly, we've got to respect that 50. It's a round number. It's a psychological number. I don't think it means a ton, but we do have support. We did see some upward movement off of that. Next swing down probably needs to come below 50 or on a little bit of a retracement, but certainly a big breakdown here on silver. Yeah, that's right. On that gold or energy here today. Taking a quick peek ahead, seeing what we can find going into tomorrow. And then I'll let you guys get the heck out of here. You did have, SBAC really down off those lows. This is a really interesting high base consolidation pattern. We looked at it yesterday, still knocking on the door of that high base. Snap on the other side of things, kind of sitting on that 20 yesterday, gap down with the market, did fight back. You need to see some upward movement. I don't like the violation. I liked kind of the double whammy of testing the old resistance and the 20-day moving average. Need to reclaim that at least. DFS, we looked at these guys sitting on that breakout point, certainly still sitting there here today. I'd love if they kind of sat here for a little while, went up a little, down a little bit, and then happened. I really like the price, but I need a little more development. We looked at NOC breaking out, really solid movement there today. SLB did break down, did close below that support level, but did come off of those lows. Netflix, we looked at them. We looked at PSA, CME. We looked at CME. Yeah, we did. We looked at CME. Did push through that resistance here today. Looked at Oxy continuing. Energy's very weak. Definitely wanted to look at ABMD here today with you guys. I thought that was a really interesting. I mean, that was a disastrous earnings response, right? Breaking that support level. We looked at CERN, still think a very interesting place. AIZ, Dove, I put up on the Tackle Trading Twitter, testing a really, really important price point. If you look at this guy here, resistance, knockdown, breakout, support, good run, tank, still holds, bigger run here today, and it's lining up with the 200-day moving average. So whatever side you're on, the bulls that like I'm betting on support holding, well, you know where support is, right? So if that gives out, you know where to set that stop loss. If you're the breakdown trader, well, hey, if this gives out, that's a lot of history. There's some room to the downside. Let's see if that happens. I love when stocks are in places like this because there's something for everybody, at least potentially going forward. I thought just based off of the history of how often we've responded off that price made Dove an interesting candidate. We looked at AKAM here coming off of that after a big earnings win as well. So still plenty of interesting things out there. I know we got to wrap up here. Anybody got anything you want me to take a quick peek at before we do? And while I do that, it's interesting times in the market, ladies and gentlemen. Now's a good time to follow rules. Keep in mind we're, in that trade war type environment, being, quick to lock in profits, whether that's trailing stops up, faster than normal, scaling out of positions, taking smaller position sizes. There's lots of ways that we can go about it if we're concerned about the, more volatile nature. But I do think, it's important until we're kind of through it, we assume that we're not through it. And I don't want, I'm not going to be surprised tomorrow, whatever might happen in the day. But there's interesting opportunities on both sides of the coin, both bullish and bearish in a lot of different areas right now, in my opinion, at least. So follow the rules. Don't feel like you have to chase. That is nice. I really like this one too. I'm a great call. Here, we had this big response to earnings, right into resistance, just who knows, but a bad time to do that, right? With the way that the market moved late last week and here on Monday. So really pushed down, fairly or unfairly, we could argue all we wanted to, but a great response here today. Another REIT here. Love the way that this chart looks. I'm going to zoom in a little bit because it kind of looks like a little bit of a cup and handle breakout if we kind of zoom it into a 4 or maybe a 2-hour time frame. That's a pretty nice looking breakout in an area that I at least like overall from a bullish perspective. Did really like the response to the earnings as well. So kind of in good report, at least what I thought was a good report, breaking resistance. Absolutely an interesting candidate for sure. Amy, thank you for bringing that one up because I was watching them back here kind of the day after, the day after, but then Monday came and went and I moved on to greener pastures. I should have bought the pullback. So nice. Yeah, I wouldn't want to be on the other end of that trade by any means. We've held some support. We've got a higher low here, a little bit of a cup and handle, strong movement here today. in an area that showed some pretty good strength here today. Many of the REITs were looking impressive. So thank you for sharing. Love the way that that one is looking, especially you can see a little more follow through for those of us who maybe aren't there. But good luck with your trade, Amy, no matter what we do or don't do. Good luck, my friend. All right, ladies and gentlemen, that is going to do it for the market recap for today. But certainly, as always, guys, it is my pleasure. I do appreciate everybody's time. Those of you who hang out here live with me, it's a lot of fun. I really like hanging out, talking stock with you guys. So thank you for joining me. Those of you who catch a little later in the afternoon, certainly appreciate you guys as well. Let's see. We got bear market going on over at Tackle Trading tonight, I believe, for our for our team members over there. We have, of course, always invite you to subscribe to the channel, hit that notification bell. Join us over on Instagram. I believe Coca-Cola is waiting over there. A little something on Coca-Cola over on the Tackle Instagram page. So be sure to check that out. See what we've got going on over there. Of course, you know me. I always invite you to join us at Tackle Trading on Twitter. At me, and of course at Frank Martin 23. That's where you can find me on Twitter as well. Always happy to see you guys over there as well. And hey, likewise, Adib, my pleasure. You are very welcome. Thank you for joining me as always, guys. It's my pleasure. I love doing this with you guys. We'll keep doing it. We'll keep doing it. We'll keep evolving a little bit as we go. It's been like a year since we started the market recap, as crazy as that is. I don't remember exactly when it started, but it's been a while. And this is why I love routines, whether it's in trading or anything. Now, if you know, it's weird when it's 2 o'clock. I'm in Utah, 2 o'clock. I go open the room to make sure my computer's not going to revolt on me. And there we go. Tackle 25. Thank you, Patricia. I thought I was wrong there. I guess I could have just went over to tackletrading.com and saw. But thank you. You're on top of things. That's why, you know, you guys help me out probably more than I help you. So thank you very much, Patricia. All right, guys, get out of here. Have a great Wednesday night. I will see you same time tomorrow. Check the futures on the open. Don't be, you know, a crazy person, right? Trade what you see. Trade within your systems and rules and your comfort zone. And we'll see where this one takes us. So thanks a lot, guys. Get out of here. Have a great night, and I will see you tomorrow. Bye, everybody.